Good evening, my name is Boris Sapozhnikov, and today we will speak about the mortgages for new Canadians. This webinar will be divided for two parts. At first part you will see my presentation, and in the second part you will have opportunity to ask me any questions that you may have. Also you can use YouTube chat and during this presentation start to ask questions or at the end of the presentation. The New to Canada program is available to the newcomers with permanent and non-permanent resident status and supported by Canada Mortgage and Housing Corporation, CMHC, Genworth Canada, and Canada Guarantee. What are general requirements? So general requirements to qualify for the newcomers programs. The newcomer must have immigrated to Canada within the last 5 years. The maximum property value must be less than $1 million, and the maximum amortization period is 25 years. If any of these rules is not working for you, you still may qualify for the similar programs, so you need to speak to your broker, and broker will help you to answer on these questions. So let's start with the first requirement, main requirements. First requirement is down payment. A down payment is the amount of money that you put towards the purchase of home. The minimum down payment comes from your own resources. However, a gift of a down payment from an immediate relative is acceptable. Funds must have been in your account for 19 days before you apply for mortgage. A minimum down payment starting at 5%. For a purchase price of $500,000 or less, the minimum down payment is just 5%. When the purchase price is above $500,000, the minimum down payment is 5% for the first half and 10% for the remaining portion. Let's look on these examples. Let's say you're purchasing home and the purchase price of your home is $400,000. You will need a minimum down payment of 5% of the purchase price. The minimum down payment will be $20,000. Let's look on another example, example number 2. Let's say your purchase price $600,000. So your minimum down payment will be 5% on the first $500,000 for the total of $25,000. On the remaining $100,000, your minimum down payment will be 10% for a total of $10,000. So we have $25,000 and $10,000, so total is $35,000. Second requirement is mortgage default insurance. Mortgage default insurance is mandatory if you are buying a home in Canada with a down payment of less than 20%. So, if you have 20% of down payment, you don't need meet this requirement, so you don't need to use mortgage default insurance. So you can purchase your house without default insurance. But if your down payment 5%, 7%, anything under 20%, you must purchase mortgage default insurance. And mortgage default insurance all protects lenders. It's not protect you, it's not protect borrower, it's protect lender. So this very, very important to remember, because sometimes people thinking, oh, if something happened to me with my health, I have insurance. This type of insurance, it's not your health insurance, it's not your home insurance, it's a mortgage default insurance. So in Canada we have different insurances, and you need to speak to mortgage broker, to mortgage professional to understand every type of the insurance. In this presentation I'm speaking about only mortgage default insurance, which is mandatory if you have a down payment less than 20%. So how it's approximately calculated? For example, purchase price of the house is $400,000 and you have only 5%, down payment $20,000. So mortgage should be 400,000 minus 20,000, 380,000. But because you need to purchase insurance, we need to add mortgage insurance amount. So it will be around $15,200. So total mortgage that you require to take will be higher than you may be expected, $395,200. Again, if you want to avoid to pay mortgage insurance, you need to have down payment more than 20%. I want to show something on mortgage calculator. So here I have mortgage payment calculator. I enter amount $400,000 and here you can see three different scenarios. First family have 5% down payment, so it's 20,000. Second family has 10% down payment, so it's 40,000. And third family has 15% down payment, so it's 60,000. So mortgage insurance, of course, will be different. The more you have down payment, the less you need to purchase insurance, so it will cost you less. And here is mortgage payments. You can see what will be the mortgage payments in case if mortgage rate is 2% and amortization period you took mortgage for 25 years. Next requirement, or third requirement, build your credit. So in Canada, everyone has a credit history and have a credit score. So any financial activities is recorded, so you must be very careful with your financial decision, especially if you want in the future apply for mortgage. So what can help to build your credit? Apply for, use and pay off a credit card each month. So everyone who apply for mortgage should have at least one credit card and should use it and should pay off a credit card each month. It's recommended that you will use 30% of the total credit available for you. For example, if you have limit of $1,000 on your credit card, you can purchase up to $300. You can go up, but it's not really good for your history. Sometimes you can go up until $500 and it's still okay. But if you go more than 50%, it will immediately affect your credit history. So please, if you can, you must make sure that if you're using your credit card and you have a limit $1,000, you're using only $300. If you have a limit $2,000, of course it will be a limit or balance $600. So you need to calculate what is the 30% for your card. What else? You need to pay your bills in full and on time, including rent, utilities, telecommunication services. Please never use cash for this type of transactions, because when you're using cash, it will not be documented and you will not be able to provide any proof for your credit departments. Also recommended that you may apply for very small loan or loans from your bank and make regular payments. Paying an installment loan off early wouldn't improve your credit score. The outstanding balance should be as low as possible. So it's good to have loan, it's good to have small loan, it's good to continue to pay this loan, and you don't need to pay off this loan before you purchase a house, but please keep it as low as possible. Why it's good to have credit card and why it's good to have loan? By having these two different type of credits, you are showing your future mortgage lender that you're stable and you can manage credit card payments and loan payments. Also, you need to prove that you have a consistent source of income. How you can prove? Just stay with the same employer. You need to stay at least 3 months full-time employment, not on probation, before you're applying for mortgage. Of course, if you have part-time employment, you also can apply for mortgage, but your application will be not so strong, and they may ask for more than 3 months, maybe for a year or 2 at least. What are alternative methods? Sometimes people so new in Canada that they don't have credit history. Without a credit history, they don't have bad credit history, they just don't have any history. So what I recommend people who is relatively new in Canada and don't have any history? First of all, avoid use cash. All payments on time or before due dates. It will help to build your history. What bank may require from you? Bank may require confirmation of payment of rent for the preceding 12 months. Bank may require confirmation of additional financial obligation or documented regular savings, such as utilities, cable, childcare expenses, insurance premiums. Of course, it only if it's in case of monthly payments. Documented regular savings if you save something every month. 6 months of your bank statements, summaries of all your transactions. Usually it's required when you borrowing and you have some kind of down payment between 10 and 20%. For non-permanent residents also eligible for mortgages, but they may need to provide a letter of reference from the financial institution of your country of origin. Permanent residents usually not required to provide letter, but for non-permanent residents it will be required. Now we are going for requirement number 4, about debt service and the mortgage stress test. I believe a lot of people already heard about this, about mortgage stress test, news, a lot of people speaking about mortgage stress test and about debt services. So all these debt services and mortgage stress tests, this help lender to understand if you can manage payments. So what is first debt service? GDS, gross debt service ratio. So if you take your own monthly housing costs, including your mortgage, principal and interest, property tax, heating, annual site lease, in the case of leasehold, tenure, 50% of applicable condominium fees, all this, if you divide to your gross household income, it should be under 32%. TDS is the similar, again, all your debts, like your mortgage, your property taxes, your heating, and also all your payments on other debts like loans or credit cards, all this you should divide by your gross annual household income, and it shouldn't be more than 40%. 32% for GGS and TDS 40% is the industry standards. What's a mortgage stress test? Mortgage stress test requires a lender to check that borrower, so you, can still make the payments at a rate that's higher than they will actually pay. The lender will check your ability to make your payments based on the Bank of Canada qualifying grade, which is currently 4.79. Okay, so let's look on example. So in this example, I would like to show how family can manage and be under GDS 32% and TDS 40%. Let's say home price $400,000. The family has $20,000 so they have 5% down payment. Let's say family's monthly household income is $8,750. It's usually something like 2 adults working full-time with average salary $25.24 per hour. Let's say the monthly mortgage payment they need $2,251.49 is based on qualifying rate 4.79. Monthly heating expenses $150 and monthly property taxes $350 and vehicle loan $200. So how I calculate GDS? So I'm adding monthly house income. I am adding monthly mortgage payment to monthly heating expenses, to monthly property taxes, and I divide it by monthly household income. And I should get under 32%. In this scenario, it will be 31.44%, so family will qualify for this rate. Where I add vehicle loan. So again, I'm taking monthly mortgage payment, I'm adding monthly heating expenses, I'm adding to this monthly property taxes, and I should add any other debts, for example, vehicle loan. After I add all this, I divide this by monthly household income, and I should get under 40%. In this case, it's 33.73%, under 40%. So this family qualified for the mortgage, and this family's actual monthly mortgage payments based on rate 1.89 will be $1,652.58. So you can see this amount is much less the amount that used for calculation. As I said, mortgage stress test wants to make sure if mortgages will go up, even up to $2,251, you will still be able to pay. But you will not pay this monthly. You will pay this amount monthly, $1,652.58. I also suggested you can use my YouTube channel. I recently, just today, uploaded a video that helps calculate how much mortgage you can afford. So you can use this video and calculate your special, what you really need according to your family situation. If you're not sure how to do this, you always can contact me and I can help to do this for you. Now, please note that ratios serve as the guidelines and you may still qualify for a mortgage even if your GDS and TDS are slightly higher than the industry standard. Actually, the maximum GDS limit used by some lenders to qualify borrowers is 39% and the maximum TDS limit is 44%. So, what I'm trying to say, this family qualified and got the best rate in their current situation, but if your GDS more than 32 and more than 40, but under 39 and under 44, or just 39 and 44, you still will be qualified for mortgage, but your interest rate will be different. Let's look on example number 2. This family also wants to purchase house for $400,000. They also has down payment $20,000, but they don't really have high income. They are making $7,100 per month. It's a gross monthly household income. It's not that goes to the bank, it's gross monthly household income. So 2 adults working full time, average salary $20.48 per hour. Monthly mortgage payment will be $2,251.49. It's based on the qualified rate on mortgage stress test 4.79. Monthly heating expense $150, monthly property taxes $350, vehicle loans, let's say $350. So this family still qualify. How can I check it? So I take monthly mortgage payments, 2,251. I'm adding to monthly heating expenses, 150. I'm adding to monthly property taxes, 350. I'm dividing this to monthly household income, that it's 7,100. And I will get 38.75%. So it's under 39%. This family still will be qualified for mortgage. And in order to calculate TDS, what I am doing, I'm taking again monthly mortgage payment, I'm doing monthly heating expenses, monthly property taxes, vehicle loans, and dividing by monthly household income. I'm getting 43.68%, under 44%. So this family qualified for the mortgage, and they may be eligible for the rate 2.2. And this is what they will pay monthly, $1,711.87. Requirement number 5, closing fees. Sometimes people forget that they need to more money than just down payment. Closing costs include but are not limited to lawyer fees, GST, PST as applicable, land transfer tax if applicable, some kind of adjustment, and it can be something in between 1.5% to 4%. So please remember, so you not only down payment, you need this cash money for your closing costs. Additional requirements. If your down payment is 20% or more, for example, you have something like 25% of the purchase price of the house, so your down payment should be not from gifted funds. And also, it may require home appraisal. What is a home appraisal? It's professional opinion of the value of home. Unfortunately, you cannot choose your appraiser. The appraiser must be chosen by your lender. So who is appraisal? Is a professional who should come to the house and evaluate it to give a realistic price for this house. So please note that other requirements may apply and are subject to change. Please be aware about it and speak to your mortgage professional. Things to avoid before applying for a mortgage. Let's say you did your calculation, you spoke to your mortgage professional, you already knows what you can afford. You started to shopping for the house, and it sometimes take months, sometimes it's several months before you buying your new house, and sometimes even you send all your application documents and you're waiting just for approval. So in all this period, before you apply for a mortgage and waiting for approval for your mortgage and waiting that money go toward purchase of your house, so what you need to do? Please don't take out other loans. So you need to avoid to take out other loans, such as car loans, personal loans, student loans. All these loans have one thing in common. They increase your TDS, and you should remember your TDS in ideal world should be under 40%. Carrying credit card debt. It's lower your credit score and increase your TDS. If you have any debts on your credit card, it creates some difficulty to purchase the house. For example, if somebody never had debt on credit card and just started to get debts before purchasing house or during the process of purchasing house, he or she may be declined just because they created a debt on credit card. Please avoid using cash. You need documented credit history, bank statements, summaries of all transaction payment history. So please don't use cash except some very small cases. but if you need to pay for your expenses, please try to use your credit card, use check. You need that these expenses will be documented. Also, one more problem is when people falling behind on bills. The people preparing money, preparing cash to purchase a new house, and they forget to pay some bills, and it's not good. It will immediately affect your credit history, and it may decrease your credit score, and it can affect if you will be eligible for mortgage or no. Some people trying to max their credit cards. It's not good. Again, remember, using more than 30% of total credit available to you. It may decrease your credit score. It may negatively affect your credit history. Please don't switch your jobs. People moving to the new home, exciting, getting new jobs. When you switching jobs just before you are applying for mortgage, and during the process of applying for mortgage, you may not be qualified for mortgage because your new place of work, you're still on probation there, and it's not good. You need at least 3 months of full-time employment with the same employer without probation. Probation period should be lifted. Your employer should say you not on probation. So be careful if you're planning to switch jobs before applying for mortgage. If you're still searching for a job or changing a job, change your job, wait 3 months, and after this apply for mortgage. I am strongly recommend in this situation speak to your mortgage professional and be in touch with him about all the steps that you are doing, like all the steps about your cards, all the steps about looking or searching jobs or changing jobs, anything about your bills. Please let you know your mortgage professional immediately if something happen or something going to change. Okay, now it's a time for question and answers. So I'm waiting for your questions. You can use YouTube chat and ask your questions. Okay, great. I got some questions on my email. So one of the questions, how do I know what is the current GDS TDS? Okay. So in order to answer on this question, what is the current GDS or TDS? I will go online . So for example, Canada Mortgage and Housing Corporation, CMHC Canada. Here you can get information about homeowner mortgage loan insurance. And here is GDS and TDS requirements. You can see GDS 32% and TDS should be 40%. You also can go to other lenders or mortgage insurers websites. I just will show one more example. This is our Canada Guarantee website. Here you have different GDS and TDS, and you can see that maximum debt service ratios can be 39-44%. And if you go down here, you can find Maple Leaf Advantage This is a program for new Canadians, and maximum debt service ratio is GDS 39 and TDS 44. So on this website you can check what is the requirements for GDS and TDS. Okay. One more question that I got on my email. When can I buy a home after a consumer proposal? Okay, so first of all, what is a consumer proposal? The consumer proposal is actually an alternative to bankruptcy and is the only government-approved debt settlement program in Canada. If you have at least 20% of down payment, you may even be able to buy house as soon as you complete your consumer proposal. So basically immediately after you finished your or paid out your consumer proposal. But you probably will need to work with B lender or private lender, so speak to mortgage professional. You can call me, you can email me, and I can help. What is in the cases of 20% down payment or less 20% of down payment? So if, for example, you have a consumer proposal and you don't have 20% down payment, so probably it's not probably, you will need insurance. So from CMHSC or Genworth or Canada Guarantee. In this scenario, you will need to wait at least 2 years and build your new credit, because the lenders want to be sure if you don't have enough money, so they want to be sure that your history is not just you paid out your consumer proposal, so you are building a new history and your history is good. So you need to be at least 2 years of clean new credit before you come applying for any mortgages. Okay, I don't see any other questions here. So thank you very much for participating. If you still have any questions and you would like to speak to me in person, you can call me 204-998-349. If you want to write your questions, you can write on my email boris.sapozhnikov@centum.ca. And if you just started to watch this video and didn't have time for your questions, so please don't hesitate to email or call me. I will be happy to answer all your questions. So thank you very much everybody for participating. And have a wonderful day.